Business sentiment in the manufacturing and services sectors improved in January, according to the Taiwan Institute of Economic Research. In the think tank's latest monthly survey, sentiment in manufacturing climbed to its highest point since October 2007.
In TIER's latest business sentiment survey, the composite index for manufacturing reached its highest point since October 2007. Sentiment in the service sector rose for the second month in a row, although the construction industry extended a downward trend.
This year, Taiwan is very fortunate in being able to ride the COVID boom, which has supported recovery in traditional manufacturing and innovation in ICT. Both those things are happening, and that's taken manufacturing sentiment to new heights. Last year, our manufacturing sector, or the export industry, picked up pace. This year, growth will depend on the momentum in domestic demand and consumption, so the economic engines of the 2 years are different.
Business sentiment is rising, and according to TIER, it mainly traces back to three factors. First, there's the continued demand for electronics and ICT and the recovery of manufacturing. Second, sectors hit hard by COVID now stand to benefit from so-called revenge spending. Finally, there's the explosive growth of the semiconductor sector.
In the semiconductor sector, the delivery times are getting longer, and in some cases the product is simply out of stock, or the range is widening for price increases. The entire chip sector has entered a new commodity supercycle.
Turning to equities, the TAIEX has already hit record highs in the year of the ox. TIER said it's optimistic that the growth of the market is sustainable.
Looking at the flow of capital, more money is coming in than going out. I think that this is an important short-term driver for the market. This year, it looks like the new Taiwan dollar, at least for the first half of the year, will maintain its upward trend. So long as the new Taiwan dollar doesn't weaken, there will continue to be a positive effect in the market. In addition to high-tech exports, traditional industries have also returned to normal operations. The fundamentals of the economic engine look quite promising now. Thanks to the world's central banks continuing with monetary easing, capital will look for reliable investment targets, and Taiwan is certainly one.
TIER said that for the economy, there is smooth sailing ahead.
According to IHS Markit's latest estimate, Taiwan's GDP this year will stand at 4%. So this year, Taiwan GDP will indeed be 4% with an eye on 5%. There shouldn't be any problem reaching that.
In the latest government report, Taiwan's GDP growth in last year's fourth quarter was 5.09%, while annual growth exceeded 3%. In the report, the government also revised its GDP growth forecast for 2021 from 3.83% to 4.64%, the highest since 2015.